This is Bazaar Morning Call, broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you, as always, from the CNBC TV18 Motilal Oswal studios. It's a Wednesday morning. It's a bright morning. The question is, will we continue with the gains that the market put on yesterday? I'm Prashant. With me, my colleagues Sonia and Nigel. Guys, hi, good morning.
Hi, good morning, Prashant. Good morning, Nigel.
Morning.
And such a different morning from what it was, say, 3 days ago, right? When we were talking about the market falling and levels on the downside. And, you know, in a snapshot, the market has seen a big recovery.
Well, that's right. Markets are looking good, but I think concerns continue with regard to Israel and very, very disturbing images overnight as well. So just hope that there is some de-escalation out there. The markets are in fine fettle, though, so let's see how it goes from here. Absolutely.
You know, the question is, did yesterday's big rise, in a way, at the margin preempt some of the strength that we've seen overnight, right? Because the US market started, especially the bond market started trading for the first time after the weekend clashes only last night. And actually, you know, that's the big question. So, strong day yesterday for both the Nifty and the Bank Nifty. And we did not end the day's high, but not very far away either. So think about it, right? Day before yesterday, the Nifty closed at about 19,650 or so. Sorry, it was, 650 or so was the close. This is day before yesterday on Friday. Then we came back and, day before yesterday, we saw a very sharp cut. That is on Monday. And yesterday, the market recovered Monday's cut and then added another 30, 40 odd points. So we ended about 30, 40 points above where we left off last Friday, which is, I mean, absolutely great news. Now, the big story overnight, and this is something we've highlighted over the last 4-5 trading sessions, is the big fall across the US yield curve. Between 12 and 16 basis point fall across the yield curve. We put out a piece last week on Wednesday, looking at what happens when yields go up 100 basis points in a very short time span. The conclusion was that more often than not, we see between a 30 and 50% retracement. Has that started is the question. And if it has started, there perhaps is more to go, because the rally in the rise in US 10-year yields was 100 basis points. And from the highs, we've only given back about 20 basis points so far in 2 sessions, right? So compared to last Friday's close, the 10-year yield was down 15 basis points. We ended at about 4.66 odd percent. Equities and especially growth stocks, because of that sharp fall in yields, rallied. So the Nasdaq was the outperformer as compared to the other big index, S&P. It ended about 0.6% higher. There was, a Fed speak, which, at the margin was hawkish, and we can talk about that. But I think the broader reinforcement came, and we put this out yesterday during closing as well, the last hour as well, that various Fed presidents are weighing in and asking the question, if bond yields are already so high, and that is the rise has largely been because of term premium rising, which is basically, it's a fiscal impulse, not a monetary impulse, then is another 25 basis point hike really necessary? I mean, should we sort of cap what we've done in terms of rate hikes and be done with it, because market interest rates are higher and they're tightening financial conditions, and that's been the big theme. Dollar index, it sold off a little bit, a 0.25% or so lower. We're at about 105.75. So far cry from the 107 plus kind of levels we were looking at. No further push higher for oil prices as well. We're, just around the $88 a barrel kind of mark. Now, coming to the market here, the Nifty here, we were looking at retracements, but the picture has changed, right? Now, let's just go with what the market is telling us, that the market is done with the fall and it wants to kind of move higher and build on it. So if you take that setup, then you basically have to look at the fall from the 15th of September high to the 4th of October low, both for the Nifty and the Bank Nifty. And then when you look at those retracements, these are the levels you get. First up is about 19,800. Straight off the bat, the resistance comes in. To be precise, the number is 19,778, which is the 50% retracement of the fall. Ultimately, you need to take out the 19,883 level, which is closer to 19,900. So 19,800 to the 19,900, these are 50 and 61.8% retracements of the fall that we've seen. And I think it's possible that we actually, push towards those levels. Broad support for the Nifty is around the 19,500 levels, which is the low that we saw day before yesterday. Bank Nifty is still not making a higher high, right? And I think that is a problem. The last high was 44,500. We left off at about 44,360. But, I mean, if the Nifty does want to move higher, intermarket divergences kind of resolve themselves and the Bank Nifty will follow Nifty's lead. So the bank index needs to cross 44,757 first. Again, it's a first retracement. The recovery has been weaker, so that's only the 38% retracement. And on the downside, 43,800, which is the low recently, must be respected in case we actually start to get any dips, any sell-offs once again. You know, we have to go with what the market is telling us and maybe take small trades and see if we want to go higher and keep going higher. So that's the reason why, we are putting those levels out, and we've changed the sort of structure in terms of how we are looking at these retracement levels. So the resistances, etc., move higher. But it's not all clear. I mean, it never is all clear. But the point is, later today we will get Fed minutes. But the most important data point this week out of the US, which can change the trajectory for yields once again, is the CPI number, monthly inflation number in the US, but that is only tomorrow. Nothing you can do about it. For now, the GIFT Nifty implied open is about 55 points higher. Sonia.
Absolutely. And, one thing is for sure, right, that the buy on dip strategy that was advocated about last week when we were in the midst of that crisis, that buy on dip strategy is something that has played out beautifully, and that's something that can continue over the next many days. So this is definitely an uptrending market, and you're seeing it in the internals as well. The Nifty, in fact, is up about 250 points from the 4th of October low that we saw of around 19,430. So we've covered quite a bit of ground. And let's not forget that the Nifty is about 2%, just 2.5% away from all-time highs. So the uptrend is intact. The data is suggesting so as well. The big trigger to watch later this evening will be TCS's numbers. They come out post-market hours. There is that buyback as well that will be considered. Remember, in the last quarter, between last quarter and now, the TCS stock is up about 7-odd%. It's almost at a 52-week high. And, there have been strong deal wins from the company. There is expectation of a demand revival. There is expectation that the commentary will be positive as well. So the street might go in positive into these numbers today as well. Keep an eye out on that. The other pocket that everyone has been talking about in the last 24 hours is realty. The Nifty Realty Index, in fact, is at a 15-year high. Very strong real estate updates. And this morning as well, Morgan Stanley put out a report on something like a Phoenix Mills, where they said that the second half of the fiscal is expected to be better than the first half. So the first half was great. Perhaps there could be some more follow-on buying, considering that the second half is expected to be better. All right, on global cues, Prashant summed it up. Very good data coming in. The Dow is up about 130 points. All eyes will now be on the US Producer Price Index that comes out later. And in terms of our own markets, the DI has bought about a little less than 2,000 crores, while FI selling was there, but it was not as bad, about 1,000 crores of FI selling. But give and take everything, this is a very, very strong market, very resilient market. Buy on dip strategy is something that can continue. Of course, if TCS's numbers are half decent and the commentary is very good, that's what the street is awaiting. See, the numbers are expected to be lackluster this time, no great shakes, but it's the commentary that the street will focus on. If that comes through positive, then that will be another trigger to latch onto by the bulls.
Well, that's right. Sonia, I think buy on dips will continue, but I think it could be prudent, given the kind of rally that we've seen from the recent lows, that maybe take some money off the table if you're going to see some bit of a gap up. That could be a strategy that you look at, and you continue to focus on individual stocks as well. And I say this because today is a big day. Post-market hours, you have TCS's results. The stock hasn't been weak, so that's one factor. You'll have to wait by for the commentary. From the United States, you're going to be looking at the Fed minutes as well as the PPI data. And also the Israel conflict, it continues. The sound bites as well coming out of there are still leaving you in a bit of a flux. So, those are the cues out there. So the short point is, I think maybe taking some money off the table, if you get a gap up, would actually be prudent. Now, yesterday, after a while, the Nifty Bank, that was the big point that played out, because that was an outperformer, relative outperformer in comparison to the Nifty. And after a while, actually, we have seen something like that. And the data point showed that there was clear signs of short covering on the Nifty Bank, because it ended higher with a gain of close to 100%, and the open interest was down by more than 10%. On the Nifty, the short covering was a little bit more, little marginal. It was down close to only around 2%, the open interest. So the big short covering took place on the Nifty Bank, and that perfectly ties in with what the FIs did. They covered close to 5,000 short positions on the index futures, so the short position continues at around 74%. The PCR, remember, it was trending around that 1.05. Now that's moved to around 1.3 because the kind of put writing we saw yesterday. 19,600 put, 19,650 put at the start of the session. The premium on both those two were around 100 to around 120 points odd. So if you just look at those writers, they'll be looking at defending the 19,500 to around 19,520 odd mark. So that's going to be the crucial support zone. On the upside, though, the call writers, after a while, they ran for cover. The Nifty did trend up, and on the 19,800 call, you had some unwinding. Closer around 15 lakh shares did get unwound. So getting to the level straight away, we start closer to around maybe the 20 DMA, which is around 19,770. That's going to be a bit of a resistance zone out there. The 50 DMA on the downside, that'll be a mark that you'll be looking at. But the firm support comes in at around 19,500 odd. On the Nifty Bank, you'll have expiry that will play out today. And the 44,500 call has the highest open interest. The premium is close to around 100 rupees odd. So the congestion zone is around 44,600 to around 44,700. If the Nifty Bank has more in it, then it'll help the Nifty. But the important congestion zone is that because the 50 as well as the 100 DMA is in that vicinity itself. The GIFT Nifty, for starters, going by the cues that we saw overnight, were indicating a 50-60 point gap up. So we'll be starting closer around the 20 DMA. It could be prudent to take some money off the table post the recent bounce that we've seen.
Well, 50, 55 points higher, as you said, Nigel. So we'll see how things open and then proceed from here. We'll take a very quick look at what's lined up here in the first half hour of the show today. Let's get you sort of details from across the globe. Arvind Sanger is our guest of Geosphere Capital Management. He'll discuss the conflict and, of course, his views on the big crash in the 10-year yields, the top 10 stocks of the day with our research team coming up a little later. And at 8:30 this morning, we'll do a fundamental stock check with Devin Choksi of DR Choksi himself.
All right, let's begin the day then with a view coming in from Alexander Redman of CLSA, who posts that in combination, a strong credit impulse, favorable energy pricing, improving external balance dynamics, robust GDP and EPS growth, increasing profitability, a supportive macro outlook, and additional capacity for non-resident asset accumulation will sustain the Indian equity momentum trade into 2024. They have raised the regional allocation for India to a 20% overweight stance. High conviction calls include Reliance Industries, HDFC Bank, ICICI Bank, Bharti Airtel, SBI, Bajaj Finance, L&T, Axis Bank, ONGC, and Tata Motors. So that's a big, big India upgrade coming in from CLSA this morning.
Well, and we'll kind of sort of go into that note in some detail a little later. Kunal Sudani of Shin & Bank says that the dollar index and yield slipped after, Fed's Bostic from Atlanta Fed delivered some dovish words. He said Fed policymakers are worried about rising Treasury yields as it could dampen financial conditions. He says all eyes are on the U.S. inflation figures from September and FOMC minutes this week. For the USD INR, he says 83 to a dollar acts as a support, while 83.3 is the immediate resistance.
Okay, and on the bonds, Neeraj Gambhir of Axis Bank says bond yields rose sharply post the RBI's announcement of the use of OMO sales for liquidity management. He says the market is now waiting for further details on the OMO sales, and depending upon the size and timing, there could be further increase in yields. He expects the 10-year benchmark bond yield to trade in a range of 7.3 to 7.40% this week.
Okay, we have lots of stock-specific action to track today. We'll get to it in just a bit in our special segment. We're looking at Max, Ugro Capital, Religare, Lakshmi Organic, Shiva Cement that are on our radar for the back of positive news flow, and Bank of Baroda, Cipla, Z, Finolex Cables, stocks which are on the radar, and they're likely to open in the red.
Okay, in just a bit, we will be talking to some experts as well. That's a big CLSA upgrade, by the way, that came through where they've increased their India portfolio allocation to 20%. So that's really the big talking point this morning. More on that coming up on the other side of the break. We'll also have a long list of stocks that you can watch out for as we head into a brand new day of trade. Stay with us.